Good morning. I'm Rich Shafritz, and my law partner Doug Dean is on with us, and we have two great guests today who are going to really expand our knowledge and hopefully yours on residential investment real estate. I'd like to introduce real quickly Sue Cho, who's the general manager for New Western, and Mark Fikse, who is the founder and CEO of Skybeam Capital. So welcome, guys, and I'm going to turn it over to Doug, and he's going to brag about y'all for just a moment before we get started on our Q&A.
Thank you, Rich. Mark has over 30 years of experience leading and growing companies in real estate and construction. He is currently the founder and CEO of Skybeam Capital, which is a local Georgia private lender. Before founding Skybeam, Mark was the founder and CEO of Interior Logic Group, which was an $800 million private equity company that served home builders, apartments, and other commercial customers. Additionally, Mark has had experience as a division president for Stock Building Supply, an operating partner for a private equity fund, vice president of strategy for Home Depot, and a consultant with McKinsey & Company, Blue Ridge Partners, and Accenture. Mark has an MBA from Duke and is a CPA. Sue Cho has been in the real estate business since 2007, where he's bought and sold deals in 3 different markets: Dallas, Houston, and Atlanta. He's currently the broker and general manager for the Atlanta branch of New Western Acquisitions. New Western is an investment real estate company that specializes in buying and selling single-family homes at steep discounts to cash investors. New Western Acquisitions is proud to maintain great working relationships with a number of investors by giving them quality products. Along with running the daily operations of New Western Acquisition, Sue himself also purchases single-family homes to either rent or flip. Gentlemen, welcome to our webinar today.
We're going to have a lot of our friends of the firm who may not even be familiar with the term wholesaler. Can you just tell everybody a little bit about your company and what you do?
Yeah, so what we do at New Western is kind of organizing the market on the wholesale side of things. So we have a specific niche that we've created where we go after distressed single-family inventory. We pair up sellers who are looking to sell the properties, other one-trucker wholesalers who are looking to wholesale their contracts with either mom-and-pop real estate investors or institutional buyers who want to buy properties at discounts that obviously need a little bit of renovation, and we make a margin in the middle of it.
Okay,
but
so
we've been around for ever since 2007. We started with one office in Dallas, and I was in that original office, and we kind of grew the branches to now 34 different locations across the nation.
Very cool.
That's really awesome. So you use the term wholesaler. Assume that I don't even know what the word wholesaler means, which I do, but what are you wholesaling so that somebody watching this who's never heard that term before, what does that mean?
So we're taking a contract with the owner of record, and we could either assign that contract or equitable rights to that contract to another entity or buyer. In our situation, we have internal funds that we fund the transaction with whoever we buy the property from, and immediately afterwards resell the property for a profit.
Okay. And Mark, I'm going to turn to you for a second. What was it that made you decide after your last venture to get into the private money lending, or the hard money lending, as we'll talk about a little bit in just a moment?
Yeah, Richard, good question. I think it was a balance of two things. One, the opportunity in the marketplace that you could see both in Atlanta, as well as the transition of real estate investment and the growth of that market segment in Atlanta. So there's a business opportunity there. The second thing is just a personal opportunity, right? I've spent the last 30 years on airplanes. I've got 3 million frequent flyer miles, and I wanted fewer of those. And so I wanted to find something that would be a little bit more local, that I could start with and then grow it from there without having to be on an airplane every week as well. And
Well,
so I'm excited about the opportunity.
I hope they extend those frequent flyer miles for you
They have.
under these conditions. So, so you become a quote unquote a private lender, a hard money lender. Can you tell us a little bit about this term and what it is you're doing on a daily basis?
Yeah, a hard money lender is just a colloquial term for a real estate private lender. And the label comes from the fact that real estate is a hard asset. And so we're lending against that asset. Okay. And so, our team just works with private real estate investors, wholesalers, brokers, realtors, investors, et cetera, to provide short-term bridge loans primarily for three segments of the market: the fix and flip segment, the BRRRR, or those people that are buying, rehabbing, renting, and refinancing projects, as well as new construction projects.
Okay. Okay.
Mark, I'm curious, what criteria are you looking at when you're making a hard money loan? Which is more important, the borrower or the property?
Well, the property is more important. First and foremost, we're looking at the actual real estate project itself. We're looking at the after repair value. So, Sue and his team members often have a perspective of work that they've done when a deal is brought to us. And so we're looking at that. We're doing our own underwriting, and we're looking at the complexity and quality of the borrower's construction, their exit plan, and then also looking at the borrower's experience, credit, their general contractor's capability, and their ability to fund the project as well.
All right. Thank you, Mark. Sue, you deal with a number of different types of residential real estate investors. Can you talk a little bit about the different strategies like fix and flip, renovate and hold? A little bit of your perspective on each of the options.
Yeah. So, before I dive into that, I think that part of what the value add that we bring to real estate investors is to try to provide as much guidance as possible regarding the exit strategies. So the three main ones, like Mark discussed, are to buy it, fix it, and flip it for a profit. And then there is the landlord strategy, which is to buy the property and hold it for an extended amount of time and collect the cash flow. And then there's the BRRRR strategy, where you buy it, you finance it after you stick a tenant in there. But there's other creative methods. If the property is off market, for instance, where we're direct to owners and it's never been listed on the MLS, and the property is somewhat cleaner, then investors have the opportunity to just buy the property and just stick it on MLS for a short amount of time period. And if they make 10, 15 grand on it, with the least amount of risk possible, because they're going to end up re-renovating the house anyways, then that's potentially an option that an investor could go with. Some of our clients who are more experienced buy pieces of land that maybe already have the architectural plans stamped off by the city. Then they could, again, especially if it's an off-market deal, and they could just plop that on MLS real quick, and they could quickly sell it to another investor or a builder.
Maybe share with everybody how you're coming across these properties.
For me, it's the power in numbers. It's the organization that we have within the company, within the firm. It's about increasing our footprint and really training our agents to do their job effectively. So we built over the years relationships with other one-trucker wholesalers who are kind of really starting to get into this business. For them, it's an opportunity for them to kind of leverage their time to let us deal with the back end disposition of the property while they go do their portion of it, which is on the acquisition aspect of it. We have a huge marketing team where we go after individual sellers, directly. Over the years, we've also built relationships with listing agents and some REO agents, the ones that are still, around. I remember back in the day when 07, 08, when I first started, 85% of our business was just dealing with REO agents. Now times have obviously changed, but it's a combination of everything. But I would say the one main thing is our footprint.
Okay. Where are these transactions though coming from? I mean, are they distressed houses? Are they distressed individuals trying to unload these homes? Somebody's got to own the home for either you or as you describe them, the smaller one-off trucker wholesalers. Where are the properties coming from?
I want to say a smaller percentage of our current sales board is foreclosed properties. The majority of them are going to be individual sellers who want to sell the property for whatever reason, whether the asset itself, the property itself is in distressed condition, or whether the seller has life situations that are putting him under distress and they need to sell it. Or there's other scenarios where landlords just don't want to rent the properties anymore. We got multiple different funds who are liquidating properties for whatever reason, for cash flow purposes. I mean, I could probably talk about 10 different ways of why people want to sell properties. But I would say, to answer your question, primarily it's coming from off-market, direct-to-seller situations.
Okay. So you guys get, you find, ultimately you find a property, you find your investor. And most of these investors, unless they're institutional like hedge funds, they need Mark, or they need somebody like Mark. And when they come to you, Mark, what does a loan look like when you go to make them a loan? How do you determine the amount, the terms? Describe a little bit of how you're structuring a transaction.
It's pretty simple. We're going to take a look at what's called the after repair value. That's our assessment of what that house might sell for after it's been fixed up, right? And we're going to take a look at that. We're going to take a look at the total cost to do that project and make sure that we're lending the right amount of money against that after repair value, or that total cost, to protect our loan in the property. At the same time, we have a lot of flexibility as a local private lender. We have, the flexibility to work with our borrowers on different situations in order to try to get the deal closed that, some of the national underwriters can't do. But, today in the current environment, we're targeting a loan up to 65% ARV and 85% of loan to cost, with some flexibility around those numbers depending upon the project and the borrower.
Can you, I know you're a numbers guy, can you give me an example? I buy a home from Sue, and I pay $100,000 for that home, and it needs, I'll try to keep the math real simple, and feel free to modify the example.
50.
But I was going to say 50. I'm gonna have to put 50 into it. And when I'm done, it's going to be worth 200. What are you going to lend me? What am I going to look at as far as probably out of pocket?
Yeah. So against, if it's going to be worth 200, we're going to lend up to, kind of 130,000 of the after repair value. Generally we're looking for you to have, kind of 15% skin in the game in the current environment, maybe a little less depending upon the borrower and the project. So lending right around that, $125,000 to $130,000 plus closing cost is the borrower. We're going to lend up to that $125,000 to $130,000, and then the borrower needs to put up that difference, that down payment, and then cover the closing costs as well.
What do you say to that person? Because Mark, I wonder, when you go to look at these properties, oftentimes they are in really, really poor condition. Is that an accurate statement?
It is a completely accurate statement, and that's where a lot of our borrowers have expertise, right? How to take that property from that condition and turn it into something else. We spend a lot of time, and I know Sue and his team does as well, counseling our borrowers and investors, right, on whether or not it's a good project. And I'd say about a third of our projects that somebody brings us, we tell the borrower that this is not a good project. There's not enough profit in the investment for them to make the investment, and so they tend to walk away from those. This is these our investors and borrowers are putting their own capital at risk. They're putting their own sweat equity into this, and they deserve to make a profit. We don't see exaggerated profits. The market is pretty dynamic and pretty competitive, and so we see kind of what would be expected as a normalized profit that our borrowers can make, but not excessive profits, given the cost of the property, the transaction cost, the cost of construction, and frankly, the risk and the capital that they're putting to work in that. So
I think,
Sue's
I was going to say,
think
do you want to add anything, Sue?
to that point, on the acquisition side of it, when we're dealing with individual sellers, right? We go through a process where we spend a lot of time to figure out what is the pain point of the seller. Do they need to get out of the house quickly? Do they need to find another place to live when they actually sell the property? So we provide solutions, whether that's a lease back period or whether that's extending the closing date to 3-4 months, whatever the case is. So like Mark just said, the market, even on the acquisition side of it, is super efficient. It's sellers have more knowledge at their fingertips now than they ever have had in the past. Mm-hmm. So it's to hear scenarios where wholesalers juice the deals for massive margins. Those days, in my opinion, are just not here anymore. We focused on units. We don't need to squeeze a massive fee on every single deal of them because, again, like Mark said, on the disposition side, investors are more knowledgeable than ever. On the acquisition side, sellers are more knowledgeable than ever.
Mm-hmm.
We've talked a little bit about what's happening in traditional markets, but right now we're in a unique, historically challenging market. Can you each give your thoughts, your assessment on what you see going on in your worlds right now? Mark, I'll start with you and then throw it over to Sue.
Yeah, I think there's probably three things going on right now, right? There's an overall slowdown in the real estate market due to a decline of buyers, sellers, and the inventory is actually moving up a little bit right now in terms of months of supply. So we see a declining market. And, given the large increases in unemployment, I think we'll continue to see that. The second, I think, is we're seeing dynamic changes with respect to certain players in the marketplace, right? The iBuyers and a lot of the institutional single-family rental buyers have backed out of the market for now, as well as on the lending side, the disruption in the credit markets and the capital markets has caused us to see a large pullback in lending availability in the marketplace, at least temporarily. With respect to our business, we've had a steady flow of what I would call the more serious real estate investors, right? The ones that have the capital, have the experience structure. They see this as a good opportunity to buy and invest, and are still very active in the marketplace.
Well, thank you, Mark. That was one thing that we had seen is in every challenge is opportunity. And in the challenge now, with a lot of the institutional and iBuyers pulling out, that creates opportunity for experienced local investors. And I think what you're saying is you're actually seeing it pan out like that.
Yep, we are.
Sue, what are your thoughts about the current market?
So simply because the way our business is structured, we kind of see all different aspects of this, right? From the hard money lending side with, like Mark echoed, majority of them pulling out due to the secondary market, not being able to actually resell. And then we're dealing with sellers, we're dealing with real estate investors, and we're also dealing with retail real estate agents who are maybe listing the properties for the real estate investors who want to flip the properties and getting their opinions on what's going on with the marketplace. But I just pulled up some stats on the 5 major counties that we do business in for the month of March, and I was really surprised at how good the numbers looked as far as months of inventory, as far as pending sales, as far as closed units. Now, I don't suspect those numbers to be as good as in April nor in May. But that being said, I think that there is still opportunity out there if you get a certain type of inventory. I think buying the house that needs $100,000 in just the renovation aspect of it, where you're doing, a massive addition to a house, is going to be maybe not the smartest strategy currently due to what's going on with the city and the permitting side of things. Because you have to, I'm not sure in the city of Atlanta, you have to e-file the permits now. You can't just walk it over and have an expediter talk to the city officials. A lot of our investors are trying to buy lower price point homes because the initial less riskier capital investment. A lot of the investors are looking into cleaner properties with less renovation. So now their rehab process is now lowered. They're looking at other strategies also, such as the buy, fix, and stick a tenant in there and refi strategy, compared to just always be so focused on the buy, fix, and flip model. Because traditionally for us in the Atlanta market, that's been a majority of our business. But yeah, we've seen some pretty aggressive shifts in all different side of things, but currently there's still a disconnect, in my opinion, on what the sellers want to sell the property for and what the market actually demands. And there's about a 4 to 5% difference there. And I believe that if this gets worse, the sellers will start to come down to what is the correct price, which is what the demand asks for.
All right, thank you, Sue.
You all were talking about the seasoned local investors, that because the hedge funds are out of the game at the moment, it's a great time for them. What's your opinion of the new investor trying to get into this right now? And if they are going to get into it, what do you think they need to be focused on so that they can be successful as they venture into this? Just curious, and I know that you may have some opinions on that, Sue.
So it might not be super beneficial for me to say this for my firm, but I think that real estate investors want to get into flipping homes, maybe a little prematurely. They see a TV show and they think that it's really easy to get into a hard money loan. They spend $15,000, $20,000 and they think they're going to magically make that 100% ROI in 3 months. And that doesn't happen majority of the times. My first flip, I made no money on it. I didn't lose anything, but I net zero. And for me, it was a experience and a teaching lesson for the first 6 months of however long that flip took. So I encourage buyers to do their research, to get second opinions, to build relationships with people that they actually trust. This business that we're all in, it's a people business. It's a relationship business. No matter how much technology gets infused in it, I still believe that if you have strong relationships with good real estate agents, good hard money lenders, good attorney offices, just surrounding yourself with a good team, that's when you're going to be successful. Good contractors. I didn't mention that. That's important.
Can somebody do it with no money today, you think?
Well, not with us, right? Somebody's got to bring some money, right? I
Right.
think it's, first of all, I think it's an alignment of interest, right? That gets that done, right? The second is it does lower the overall cost of the project because there's, not the financing cost on the portion that they're bringing, right? And it also, speaks to, their dedication to their project, knowledge of the project, the quality of the borrower, et cetera. But, some of our best borrowers are bringing, 50% of the money into the project, and they're only looking to borrow 40 or 50% of LTV because they've been in this business a long time and they've figured out the right leverage model that works and makes it productive for them. So, I mean, we get as many of those borrowers as we do the ones trying to stretch the last nickel.
Are you willing to, I have no experience, I'm not a real estate professional or a mortgage professional. Are you willing to finance a new investor in this current environment?
Yes, we do. We've done a lot of those. In fact, several with just recently with properties that Sue and his team have brought to the table, right? We are going to investigate that a little further. We're going to understand, what the experience of that person is. Sometimes it's a new borrower that's been in the industry but has never done their own flip, or it's a team of people that have put together new LLCs. So we're always going to look at, first the economics of the project itself and how that works. And then we're going to look at, the capabilities of their contractor, the plan that they had. I think to Sue's point, right, is, let's not try to take a new borrower and try to do $100,000 full gut rehab, right? Or pop the top and put a second story on type of thing with a new borrower.
Mm-hmm.
So you're going to look at the project and make sure it aligns with that borrower. We probably counsel about a third of the people that reach out to us not to pursue a deal, and oftentimes that is the new borrower that's kind of outside their swim lane.
And going back to the zero, no cash down thing. It doesn't even make sense from a numbers perspective. If Mark is lending 65% of the value of the house, let's just use real simple math. If a house is worth $100,000, right, at top of the retail market, the loan is going to be $65,000. That means if in the scenario of zero down, the buyer needs to go all in on the purchase price, renovation, closing costs, origination points, insurance, everything at that $65,000 number. And touching back on my previous point about the market efficiencies, the seller is just too knowledgeable in our current market times to sell a property at that much of a discount. Wholesalers, the one truckers are not going to sell the property at that much of a discount because they know the market. So I would suggest or encourage that investor to maybe plan ahead and save a little bit more money and get into this when they have a little bit extra liquid cash.
All right, thank you, Sue. Even in the current environment, are your agents still finding properties? Are you able to work around the governor's executive order and local municipality orders like the city of Atlanta?
Yeah, real estate's essential, but we've taken a slow down in the month of April. For the past 2 weeks, we kind of picked it back up, which was a good momentum build for us. But yeah, we're still doing business. We're still trying to go look at deals. We're obviously taking all the precautionary measures, wearing masks and, staying 6 feet away from each other and all that good stuff. But it's been difficult and challenging, but we've been trying to power through it.
Great, thank you. Mark, have you seen any of the private lenders who pulled out of lending, or is business as usual?
Yeah, we've certainly seen a number of other private lenders pull out. I mean, our business is one where we, originate the loan, we underwrite the loan, we service the loan as we're recycling a private capital fund that we have access to. Okay, so we raise funds and then we just recycle that amongst our borrowers. The challenge is, as Sue mentioned, that a lot of the loan originators were originating loans and then selling them off in the capital markets. And those markets are at this point temporarily closed. We'll see when they come back and at what rates they do come back, and see how that unfolds over the course of the next year. But the lenders that are active are those that have ready access to an ongoing capital fund like we do.
Thank you.
You recommended that new investor maybe have a little more liquid capital.
I mean, I instruct my sales team to tell their clients that they need to have 35 to 40 in the bank. I know that seems like a big number, but again, when you start getting lower than that number from a numbers perspective, now you could only afford a certain type of product in a certain type of neighborhood. And maybe that neighborhood is not ideal for a buy, fix, and flip strategy because it hasn't gentrified yet, right? So that particular property might be geared more towards a buy, fix, and hold model or a burst strategy. But if the investor's focused on flipping the house and they want to make that $25,000, $30,000 like they see on the TV shows, I think they should expect to have 35 to 40 in the bank.
Mark?
Yeah, no, I think Sue's right on. I think that's kind of a reasonable number for a minimum. And so a number of our borrowers are in that position, but we have quite a number of borrowers that have quite a bit more capital than that, and they're spreading it around across multiple projects.
And when things go wrong, if you have no reserves, you're in trouble.
Correct. And I think that you should set some expectations from the beginning. Expect to make a little bit less because it is your first flip. Don't shoot for the stars. And, I think that if you're a little bit more cautious about everything, then, ultimately it's going to pan out well.
And who are the successful investors and who struggles? I'll start with you, Mark.
I think it's a number of things we've already touched on, right? First is just what's the focus of the project right now in today's environment. It really does have to be focused on that workforce housing, the lower price point that there's a solid demand for that versus the move up, housing at this point. So make sure it's a project that can be quickly sold, rented, et cetera. The second thing, a lot of people, they think about it, they watch TV, but I see early investors make mistakes by not having enough thought into the design, right? The design of the home, the finishes, the balance of price point versus quality of the finishes, and the curb appeal and design, right? It's funny though, they'll have the plan to renovate the inside and then they haven't touched any of the landscaping to make the house look nice for sale, right? So design is important. Third, know your limits from a capital standpoint, kind of how long you can support the project and keep going. And then, as Sue had mentioned, the construction side is incredibly important, right? Have you really got a great general contractor? Do you know how to manage the construction? Do you know how to go work with it all? And then lastly, kind of the old, plan for adversity, right? Everybody's got a plan until they get punched in the face, according to Mike Tyson, right? Okay, you gotta remember what that is and have a plan of action when bad things do happen to you.
I'm curious what advice you give investors, Sue, and then Mark, what your requirements are with the general contractors. Are you vetting them independent of your investors? And how do you all help the investor protect themselves against the incompetent or unscrupulous general contractor?
Contractors are very, very important. I would suggest working with contractors who you've kind of vetted their projects in the past, maybe go to a couple of the projects they've done in the past. I would talk about maybe not having a massive amount of your total project in the initial down payment aspect of it. you don't want to stroke a check for 100% of your renovation costs or even 50% of it when you start the work, and do it in smaller increments. And majority of the hard money lenders have a draw schedule set in place to kind of protect the borrower's interest and also the lender's interest for those reasons. But yeah, you need to find a good one, and also figure out from a contractor's perspective, like what makes them tick, and then try to be a value add to them. So if a contractor needs a draw payment, from an investor's perspective, don't take a week to get that draw payment over to them, because that's going to slow everything down, and it's not going to make the contractor very happy. I'm a big fan of, find one or two good contractors and just make them really, really happy, so that you could continue to do a lot of business with that particular person.
Mark, how about you?
Yeah, no, I think it's the collaboration is key, right? As you both mentioned, right? You've got to check references, you've got to walk projects. I think a lot of people, new investors, we see them kind of go light on the paperwork, which is probably the opposite, right? You want a strong contract with everything in writing, a detailed scope, a detailed budget, detailed payment schedules, et cetera, so that you understand exactly what's included, what level of finishes, exactly what's to be done, and working with that. And then, when the lender does, send the inspector out to do the draws, the contractor and the fix and flip borrower should both be there to make sure that they're getting a proper assessment of the projects, so that we can advance the monies to make sure everybody gets paid properly based upon the work that's been completed.
And then one more thing, before you initially purchase the property and close on it, some investors like to bring on a contractor to make a buying decision, right? I would suggest not dragging that contractor all across town to 10 different properties and not make a decision on any one of those 10, because like all of us, you don't necessarily want to spin your wheels driving around, and these contractors typically give free estimates, and it takes time for them to, or a good estimate at least, for them to actually draft that up, and they're not going to be very pleased, like I said, if you take them along for a ride.
Mark, just a follow-up question. Do you all vet the general contractor, and do you all sometimes say you can't use that general contractor, or is it really up to the individual investor?
So ultimately, we need to allow the individual investor to run their business, right? Because they are a business person, they make that decision. But we do, we have resources available to vet contractors, to do background checks, et cetera, as well as make sure that they are licensed to pull permits, right? There's a lot of people that will try to get away with using contractors to, get work done, and then realize that they didn't even pull the permits, and then they try to finish the project and they can't finish the project because they didn't follow the guidelines and pull the right permits. So that process of doing it correctly from the get-go is really critical, that they're working with a contractor that is doing things above board.
At the risk of asking you to divulge trade secrets, I know everybody'd like to know, from what you've seen in the market, are there any particular hot areas now, places where the numbers work, and on the flip side, areas where things really aren't working out? Sue, I saw you smile, so I'll let you go first. Then I'll ask Mark for his opinion.
I really don't think there's a magic sauce or like this specific place in Atlanta that no one has dove into yet, that we should all go after now. I think it's a case-by-case scenario. There's so many moving pieces to that one particular deal. Okay, did the investor maybe get it super cheap when he or she initially acquired the property, and now they're ready to resell the property during these COVID times, and they could take a 5% or 3% price decrease on it to make the property fire sale for a retail buyer. That's one scenario, right? Maybe the investor really did a great job on the renovation, so that even during these tough times, that the property could get a little bit more value than what the other comps are going for, because the house is so nice, right? But as far as area, as far as markets are concerned, there really isn't. Just it's a deal by deal cases. Me personally, I've always felt this even before COVID times. I was a big fan of going into transitional areas and no one else have not tapped into yet. And I know it's a scary thing for some investors to be the first investor to flip a house in a specific neighborhood, but I don't want to deal with the competition with other real estate investors on the acquisition aspect of it. So that allows me to buy maybe properties at a little bit of a steeper discount to kind of offset that risk that I take on. And I also get the back end appreciation a little bit faster if I'm the first comp that sold in a particular neighborhood, and hopefully there's going to be 2 or 3 more.
All right, thank you, Sue. Mark, what are your thoughts?
I think the hot area is probably more of the price point of staying down in at price points that entry level buyer versus the geographic area. There is one geographic area in town right now where there is a moratorium on permits, and that's the Grove Park area. And so, our borrowers should stay away from that for right now, because that moratorium's in place until I think September 10 from a specific geography standpoint. But other than that, we're steering our borrowers towards the lower price point homes, because we do believe with the kind of net migration to Atlanta that there's still going to be continued demand at that demand level and price point level. And that's a price point that the new builders can't even hit, because they can't build something brand new for less than $300,000.
Thank you, Mark.
All right. So Mark, you're a local guy, which is really cool, because a lot of the hard money and private lenders that are gone, even when they come back, they're not at the local events. They're not people in our community. You're here, and so is your team. And that's terrific, because it gives people the opportunity to work closer with you. Speaking of working closer with you, a lot of the hard money lenders will allow TPO or third-party origination with mortgage brokers or loan officers. We have a lot of those kind of folks that may see this, and I'm wondering if you work with them.
Yeah, absolutely. We do. We work with quite a few brokers, Rich. We have some really great broker partners that provide value to both us and the borrowers by screening projects and bringing the applicable borrower and project information to the table that allow us to very quickly underwrite and close the loan, sometimes in as little as a day or two. In fact, we had one deal with one of Sue's team members a few months ago where we closed a new Western deal brought to us by a broker in under 24 hours. Of course, I believe Shafritz and Dean had already completed the title work before the loan came to us, so it all went smoothly to close.
How do you get comfortable with the value that quickly?
Because we're local and we know the markets and we know the neighborhoods, we do our own in-house appraisal. So we don't generally, if the loan is small enough, we do our own desktop appraisal, because we've lived here for 25 years, and we know the neighborhoods, and we have experience in the neighborhoods and loans in the neighborhoods, so we can underwrite the value.
Sue, how about you? Do you work with traditional real estate agents, and how do you work with them?
All the time. Obviously, on the acquisition aspect of it, we work with them with listings that they have. Some of the deals that maybe are expired, they had a listing and they went expired, and they have a contact with the seller, and they could refer that business over to us. On the back end, on the disposition, real estate agents who have access to other cash buyers that are not in our current network, they'll bring a buyer over, and they can make their 3% or whatever flat commission they want to make on the closing.
Well, what I'm getting at, and you touched on it, is there are a lot of moving parts. You are buying a property. You are using your own funds to purchase the property. You are simultaneously, oftentimes, reselling that property or shortly thereafter. and the deal's going to get done. And we always tell folks, but it's possible that it may fund the following day. And this is something that people have to be aware of, so that they don't get caught off guard, and their sellers don't get caught off guard. And until all the, as you say, checklist, the I's are dotted, the T's are crossed, and everybody involved is protected, we're not going to disperse your funds.
Yeah, and I think you guys do a pretty good job of, having buyers and sellers sign escrow agreements to make sure that, if the funding gets delayed, that everyone is covered. And at the end of the day, people need to realize in our space that we are dealing with distressed assets. This is not a retail real estate transaction where they, have a sign at closing and they bring the keys over to you and celebrate with balloons. It just doesn't happen in our business majority of the time. And that being said, we try to do our part to make sure that the closings go as smoothly as humanly possible.
Are you seeing any successes or innovations, things that have changed because of COVID?
Mark?
Sure. No, our success is grounded on great service to our borrowers, high levels of integrity, and speed. So, our borrowers return to us for their second and third deal, and we want that. And I'm sure a lot of the buyers do the same with Sue and his team as well. So, we're seeing a lot of success of building long-term relationships with our borrowers because we've been business as usual during this time frame. That we've been there to advise and to counsel and put projects under contract and deliver term sheets, et cetera, to be there. With respect to innovation, our company was set up in the cloud to begin with. So it was a very smooth transition to work from home for now. And we continue during this time to invest in software and automation to enhance our business in the future as we march forward.
Yeah, from our point, my biggest thing for the past 2 months now almost has been innovation and change and adapting. And internally, I think my team did a pretty good job of making those necessary changes. But my big thing that I want to do going forward is to, find better ways to do things, which, we kind of have working already, but not stop that whenever the COVID crisis goes away, but kind of extend that going forward internally within the office and the company.
Is there an example of that you could share with everybody, or?
I think our marketing team has done a great job of providing content for our audience. We send out these things called flash emails twice a week to our whole entire database. And it has clips of articles from different sources, whether that's Forbes or Wall Street Journal, whatever the case is. It provides a neutral opinion on what's going on, like facts, right? This is what's happening in our current times. And if things are changing by the hour, it's really important for us, we believe, to stay engaged with our audience and inform them. But stuff like that is just one example. And, there's a lot of other things that we're kind of going behind the scenes that is going to be rolled out shortly and that we're going to sustain going forward.
What do you think about the long-term prospects? Do you think Atlanta is poised to come out better after the pandemic than other markets? And what's your analysis or thoughts on that? Mark?
Doug, I think the outlook is very solid, right? I mean, first, the long-term outlook for Atlanta, we're a net migration market where we're seeing, I think the forecast from PwC is 92,000 people a year net migration to Atlanta for the next 5 years. So I think we're set from the long-term perspective, and frankly, I think the COVID virus, that I think there's a hypothesis that we might see the north to south migration potentially even accelerate out of this. Certainly in the near term, I think we're going to see some downward pressure on prices. As Sue mentioned, sellers have to get realistic for the economics that work, and we're going to see some price pressure given the level of unemployment that's out there. But I don't think it's going to be as severe as the last recession, because we're entering into this recession with a very, very different supply-demand balance than compared to the last recession. And so I think we're seeing that. And I think Atlanta is, kind of better positioned than a lot of other markets, right? We're a diversified economy, incredible base of large employers. We're a travel, sports, and entertainment hub, and we have an accelerating tech industry as well.
Absolutely.
And so we're a phenomenally diverse city that attracts people of all ages, races, socioeconomic backgrounds.
Yep.
And our cost of living remains attractive. So I think we're still a magnet of growth for the country, and one of the top 5 housing markets in the country.
Absolutely.
Great. Thank you, Mark. Sue?
I think from the real estate, first of all, I agree with everything Mark just said. From the real estate aspect of it, the affordability, people could still afford homes over here compared to other markets across the country. And I have eyes in those markets because we obviously have brick and mortar branches in some of those markets. And it's in some of those high price point markets, it just doesn't even make sense from a numbers perspective if you want to hold the property out and rent it out than it does here in Atlanta.
One of the things we're going to be doing, guys, is sharing your contact information with our audience and hopefully your audiences, so they'll know how to get a hold of you. Want to encourage folks to reach out to Mark or Sue if you have questions or have interest in either of their companies. I'm going to end with some fun questions, but before I do, Mark, your business is limited by your ability to raise capital, and I'm curious, how do you raise that capital? I wanted to ask that earlier, and I'm going to get this one in. How do you raise capital, and who are if people are watching this, what do your investors anticipate, when they do invest with you?
Yeah, we have a private fund, and we raise capital from accredited investors. And so we continue to do that, and then some of that capital recycles as well. And so we have committed capital from people that have a vision for a collaborative partnership that allows us to kind of, balance the risk-adjusted return, right? And so what we're doing is we're pooling the funds across multiple loans so that, we are going to have some loans that end up, not performing, but in total, the returns are kind of solid in a first lien position of real estate. And so people like that. And then an individual investor has the opportunity to have that money continue to build or have a payout every month, depending upon the profit of the fund. And so that's what we're seeing. And so we've been able to continue to raise capital even this month to put more capital to work as we continue to march forward. So it's been a good environment to do that for us.
Mark, you use the term accredited investor, and I'm familiar with it, but some of our audience, they may even be accredited investors potentially, but they don't know what that means. Can you just explain?
Yeah, generally an accredited investor meets one of two litmus tests. They're meeting an assets under management. In other words, they have $1 million of investable assets to deploy, or they meet an income test, which is generally $200,000 of income for the last 2 years for an individual.
Anything. What is your Mark needs funds to redeploy, and you need
more experienced buyers who are looking to maybe capitalize during these times. It's
okay.
Probably what we need more of.
Well, like I said, we're gonna wind up with a bit of fun. What are you guys doing to to pass the time when you're not having fun like this. I mean, what could be more fun than a Q&A with Doug and Rich? But
I'm the wrong person. My agents always make fun of me. They say I'm a robot because all I do is work. So
you don't know how to you don't know how to have fun.
Or
Michelle doesn't let you. Mark, how about you?
Well, I'm glad I have a Peloton at home during this time frame, so I do spend some time there. But like Sue, I've been pretty busy as we've been growing the business. I do serve on the board of a faith-based nonprofit that I'm spending some time on as well. And with respect to books right now, I just picked up a new one, Bowling Alone. It's by Robert Putnam. It's written several years back, but it provides a kind of a fact-based look at the breakdown of social structures within our country and the implications it has for our society from that standpoint. So,
okay.
With the pandemic and people staying in more, we wanted to get your restaurant reviews. What's been your favorite for delivery that our audience may not know? Sue?
There's a small restaurant in downtown Decatur called Brush, and the chef that owns it has another ramen place in Midtown. So he kind of just moves the food over from one of his restaurants to another. And we've been getting delivery from Midtown over here because it's a little bit closer that way. But awesome sushi, in my opinion, the best sushi in Atlanta. So we've been getting that delivered to us. It's great. We do it every single weekend, Friday or Saturday. We make it a treat for ourselves.
Sounds great, Sue. Thank you. How about you, Mark?
I'm going to stick with the sushi theme. I'm in Smyrna, and there's a local place called Tokyo Sushi and Steakhouse off the East-West Connector that is a standby for us.
What are you guys watching, either TV or movies? Any good recommendations?
It's funny because my wife works in the entertainment industry, so she works for CBS. So you would think that I love TV shows, and I've actually never watched a TV show until COVID times happened. And then I started Breaking Bad, which is the old, I guess.
Right.
Yeah, and I've never watched it. So I'm on season number 5, which is, I guess, towards the end. And I really enjoyed it. I put it on like 9:30 at night. From 9:30 to 10:15, I watch one episode. I've been doing that every single night.
Nice. Mark?
Well, I grew up in Chicago, so I watched Michael Jordan put the Chicago Bulls on the map, and
Yes.
I'm pretty enthusiastic about The Last Dance. If you didn't watch it last Sunday night, they aired the first two episodes of a 10-part series on ESPN about the 1997-1998 Bulls season when they won their 6th championship. And I'm anxious to watch episodes 3 and 4 this Sunday night. And it's the best sports on TV right now.
Fantastic.
Great. Fantastic. Well, wrapping up, guys, stay healthy and stay busy. We appreciate you taking some time to sit in our Q&A today.